The silver market is being manipulated, and it's happening right under your nose. Last night, silver's price dropped 5%, but that's not the real story. The shocking truth? While the paper price in New York was getting crushed, the actual physical silver in China was trading at a $13 premium. Why would silver in the West be worth 87 while buyers in Shanghai are paying $100 for the exact same metal? This is where the system completely breaks down. And what's happening right now could change everything you think you know about silver. Stay with me, because you're about to see why this matters and how it could impact you. So what happened? At around 10:40 p.m. last night, Eastern Time, someone dumped a massive 2,000 futures contracts into the silver market. And here's the kicker. It wasn't just a random sell-off. This happened during what traders call the empty hours, that vulnerable window between the New York close and the London open. Low liquidity, thin volume. Perfect conditions for someone to make a move that would cause the price to plunge in a straight line. But hold on, this isn't some random market fluctuation. While silver was crashing in New York, the real price in Shanghai was $159. That's a $13 premium. This is the widest gap between Eastern and Western silver pricing in modern history. So here's my question. Why is someone in China paying $13 more for silver than the paper price in the West? And why, in the middle of the night, is New York driving the price down so drastically? Notice what they're not saying. There's something bigger going on, and we're just scratching the surface. Now, let's break down exactly what went down in the market last night. We're talking about 2,000 futures contracts dumped in one shot. That's 10 million ounces of silver sold within minutes. A wave of selling pressure so intense, it sent silver plummeting from $92 all the way down to $87.59. But here's what you need to focus on. This wasn't a normal market move. It wasn't the result of news, a macro event, or a sudden shift in sentiment. It was deliberate. You know the saying, follow the money. So why was this coordinated effort happening in the dead of night? Well, the empty hours are key. This is when liquidity is so thin that a small trade can send shockwaves through the market. Think of it like trying to sell your house at 3 a.m. You're not going to get a fair price because there's no competition. And that's exactly what we saw last night. Someone didn't care about getting the best price. They just needed to push silver lower. But why? Now, this is where things get wild. The paper price on the COMEX says $87.59, but physical silver on the Shanghai Futures Exchange is trading at $159, a $13 difference, and it's not closing. It's sitting there wide open, unfilled. Why? The reason is simple, and it's the most important thing you'll learn today. There's no silver to be found in the West. The metal's gone. The vaults are empty. This situation is escalating fast, and it's nothing like a normal market correction. Here's why. In commodity markets, when there's a gap between prices, the market tends to correct it almost instantly. But that $13 gap between New York and Shanghai, it's been sitting there unchallenged for hours, days even. That's not normal. That's a breakdown in the system. Now let's put this in perspective. What we're witnessing is starting to feel like something historic. Think back to 2008 when the financial system teetered on the brink, or to 2020 when the world locked down. In moments like these, the system shows its cracks and it becomes clear something is wrong. Right now, that gap isn't closing, and here's what it's signaling. There's no silver to satisfy the demand. Western vaults can't deliver. The physical metal is being hoarded. It's a market dislocation, a major warning that something is very off. So the question is, what's next? Now, things are about to get even more serious. Remember that backwardation I mentioned earlier? It's not just a small blip on the radar. This is a huge red flag. In a healthy market, the future price of silver should always be higher than the spot price. That's called contango. But right now, the spot price is higher than the futures contracts. That's backwardation, and it's a sign of desperation in the market. Let me break this down for you. In a market in backwardation, buyers are so desperate for immediate delivery that they're willing to pay more for silver today than for silver delivered in the future. It's like when a concert sells out and you see people paying $500 for a ticket to tonight's show when a ticket for next year's concert costs $300. Why? Because they want the metal now. That premium, it's the market pricing in scarcity. It's telling you that something is wrong, that the supply chain is severely stressed. And what's even more critical here is that the backwardation is persistent. It's not just a momentary shift, it's a warning sign that the physical market is breaking down. Things are spiraling out of control now, and the pressure is mounting. We're not just talking about a price drop or a market correction. We're looking at a stacked crisis. First, there's that $13 premium in Shanghai, then backwardation. But now we're seeing something even worse. The physical shortage is real, and it's spreading. Take this in. Over the last 24 hours, there's been talk of major vaults facing delivery delays, storage issues, and insufficient supply. And it's not just talk, it's happening. Major players in the silver market are being forced to make desperate moves, scrambling to cover positions they never thought would be at risk. What happens if this continues? The pressure on the paper market could collapse entirely. At some point, you can't just suppress the price with paper contracts. The physical market demands its due, and if there's nothing to deliver, the game is up. But here's the thing, the big players know this, and they're fighting tooth and nail to delay the inevitable. But how long can they keep the walls from crumbling? Let's take a step back and look at what this means for you, the everyday investor. While all of this might seem like an abstract game for the big players, the truth is this is already having real-world consequences. You've been hearing about the physical shortage, the backwardation, the gap between the paper price and the real price, but here's the kicker. This is where it starts to hit you. If you're holding silver, whether it's physical bars or futures, you're already feeling the squeeze. What happens when physical silver becomes unavailable in the West? Prices skyrocket. And when that happens, you're left trying to secure metal at a higher price, assuming you can find it. So if you're stacking physical silver or even considering jumping in, ask yourself, how much are you willing to pay to secure your position before it's too late? If this situation feels familiar, like it's the same pattern we've seen before in other asset markets, where the system breaks down and ordinary people get left behind, say so in the comments. Now let's step beyond the panic and look at what's really driving this. It's not just an isolated event. It's part of a bigger systemic issue. The big banks, the bullion market makers, and the institutions, and they're playing a game of leverage. They hold the power over the paper market, but the physical market is slipping from their control. So what happens when the system starts to break down like this? It's about more than just silver. This is about the leverage and the fear that drives the market. The pressure's on, and the big players know they're in a lose-lose situation. They either have to deliver the physical metal they don't have, or they have to buy back their shorts at whatever price the market demands. But here's the unsettling truth. This isn't about price anymore. It's about control. And the system that's been keeping these players in power is crumbling as the physical market continues to assert itself. That's why the silver price in Shanghai keeps climbing while New York struggles to hold the paper price down. So what happens next? There are two paths forward here, and both are filled with uncertainty. First, if the paper price continues to be suppressed, this game can only last for so long. As the pressure builds and the physical shortage intensifies, it's only a matter of time before the squeeze on the shorts becomes unbearable. The gaps between paper and physical prices will widen even more, and once the vaults are drained completely, the paper price will become irrelevant. What will matter then is the price of actual metal, and that's going to be much higher than $87. But on the other hand, there's the possibility that the banks and institutions can somehow maintain the pressure. They could continue manipulating the price and holding it below key levels like $80 as a way to stave off a gamma squeeze and buy themselves more time. But how much time do they really have? The physical buyers in the East are paying $100, and that gap isn't closing. The stakes are high. We're watching a ticking clock here. The question isn't if this will break, it's when. Here's the bottom line. This isn't just a market correction or a temporary glitch. What we're witnessing is the breakdown of a system that has held the price of silver in check for years. The physical market is asserting itself, and it's forcing the paper market to confront its own limitations. Right now, the price you see on your screen isn't telling you the full story. The real price of silver is being set in Shanghai in physical markets, not in the manipulated futures contracts. As long as the Shanghai Premium stays high and backwardation persists, the physical shortage is real, and the paper price is living on borrowed time. So what happens next? That depends on the moves made in the next few days. If silver closes above $80 this Friday, Expect volatility to explode next week. If it stays below, the squeeze is delayed, but not stopped. Keep watching the physical market. The screen is lying to you. Possession is the only thing that matters now. If you want to stay ahead of this story, if you want to know what's really happening in silver and beyond, make sure to subscribe and follow. We'll keep you updated with the real-time data and analysis you won't get anywhere else.